And good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Monday, August the 11th at 1:40 p.m. Pacific Daylight Time. It is getting very messy, and today was difficult to kind of put into perspective in terms of what was the market attempting to do. We had several spikes, which normally just get absorbed uh, when you move it down to like a line chart, which is where I started uh, today. And there's a couple of ways that I'm looking at this. I still believe that we are likely within the minuet B wave going up. I still believe that we still have additional upside to do. Now, I'm looking at this small five-wave structure, or as I'm counting it as a five-wave structure. This decline here, well, not totally unexpected, but in terms of the Elliott, if I put it back on the bar chart, this little decline there equaled or came down and touched the top, the end point for wave one. And what the rule states is that it can't overlap, which means it has to go below. It still can. I mean, we still have 20 minutes left in this after hour, which I'd have to consider. If I go over to the NDX, it's a little bit different. We came all the way down, but this could be one, I think a two, three, and this is a four. And if that's the case, then we should rise back up. And here again, here are our markers for the cash market. So translating that over into the futures market, which trades all night and at least an hour longer than the regular session, which it's still in right now. So if I'm going to consider that, I'm going to have to say one, two, three. And again, I'm taking this out of the bar, putting it down to the line chart. It takes that spike right out of it. And the spike was real because it's in the cash as well. So it was not like just fly up and come back down. It happened in both markets. So there was a large buyer of futures, but probably through that there was a large buyer within one of the underlying stocks. And so I'd have to go back, you'd have to go look at all of them to see which one spiked real quick. And then just kind of that was done, order was filled and it came back down. Um, So in any case, the way I look at this, one, two, three, four, five of three, A, B, that's with that spike, A, B, and this is the C wave, doesn't overlap, doesn't even actually come down and test it. Hopefully that it closes here. And then Globex has to also just start to move back up. If we continue to come down, then we're likely going to have to put it through as one, two, three, four, five, up to that level. And I'm going to take it out of that closed basis chart. One, two, three, four, five. And there could be wave one of wave C. So I drop this again a degree as I did here. And this becomes wave one, which leaves a ton of room for this market to finish and go up here. Now, if I label it wave one, I also, if I do one, two, three, four, five, I also can label it wave C and put the B wave on top of it. And if that happens, then we're looking at the C wave coming down. And this would be just the absolute beginning of it. Now, both fit. I know my original expectation was that we were going to see a pretty strong continuation of this rally, and we may still see it. Although it just doesn't seem like they're going to want to do very much. And to be honest with you, it just did not work. The only thing that actually closed up today, of course, Tesla. But even Tesla's like moving down below where it closed. And Netflix. So, I mean, and then I got SMCI, but that just kind of popped right at the end of the day. So, I mean, just prior to the close, the only thing that I showed that was up was Tesla. So we have these quick moves in these other stocks, and then those popped up. And those are the major stocks that I'm watching. There were, of course, stocks that were higher. Now, it was just kind of a bad day for a lot of things, particularly um, the dollar gained some ground. And there's all kinds of things going around as to why. Now, this is one of those situations because the overall move is corrective. This was impulsive move up to this three. Now we're in a correction. And so it becomes sloppy. It becomes more difficult. It becomes more sudden, just like boom, boom, boom. And it doesn't make it any easier to actually figure out. So, as I've said before, I need to let the market tell us. So we need to let the market continue to trade before we're going to actually have an understanding of what's going on in terms of did the B wave get put in and it's just one big flat and then we're going to come back down as a one big flat and end up back down towards this low? Possible. Is this going to be a four and we're going to now rally up? Possible. But here's what I'm going to put some parameters around that. If we're going to stop and turn and go up, it has to happen. It's not like we can continue to go down and definitively cross above wave one. That would take out this particular count. And it would leave it at 1, 2, 3, 4, 5. And I'd go with the other, which is it completed it. It completed the B wave. Now we're coming down in the C wave because the C wave I would expect to start by dropping quickly. Putting in that first five down quickly. And once it's peaked, it spiked there, I was done. Bam. And it was just a lot. And even during this selling, this is the hourly chart. During the selling, it was a chop fest, even inside of the 15-minute bars. It was very choppy and it was kind of difficult uh, to work a trade because there was no, and again, I believe because it is a correction. It is a corrective move. And these are all the things we see in a corrective move. I mean, some of the stocks, yeah, they were ready. They were going to start to rally again. We saw them hit NVIDIA, and then NVIDIA recovered and was up. And then NVIDIA goes back down. We saw AMD up over $5 at one point, finishes the day down. So there's a lot of options trading as well. So again, everything that we're seeing is not necessarily just equity traders, although that's what they're trading, but making the decision as to whether they're bullish or bearish. It is all dependent on the options. So again, I just want to state that the options within the underlying and also in the cues and everything else are truly controlling direction, depth, and everything else right now. So we could see that all switch out tomorrow and reverse and go do something else. But right now, how I'm going to leave this is that the three is actually, let me just put it back over here for just a moment. The three has to be here, not here, is here. And then this is A, B, and this is the C to put away four. Okay. Otherwise, it's 1, 2, 3, 4, 5. and a B wave goes above it. Those are the two that I'm coming up with. And now we have to let the market trade so we can determine which one it is. How I know if you're a position trader or if you're looking to, you were expecting that we're going to get another pop and that chance to sell, it will come, but now we have to wait. And why do I say that? Again, going back out to the hourly chart, we're in a minute fourth wave. What comes next is a minute fifth wave. So all of these measurements, all of these levels, I believe eventually will be taken out, not necessarily within the context of an irregular B wave, but in the context of a minute fifth wave up. I think these will all be taken out. And then we're really looking for, I believe, closer to between 24 and 25,000. The algorithms that I run in the NASDAQ continue to suggest that it is the wave three is complete, the minute wave three is complete, and we remain within a fourth wave, and now needing another leg down. And they actually also come up with the same levels that I have for because we all run the fibs. And so we have 22,384 and 21,481 down here for the C wave. Again, it's going to be measured a lot differently because if this is a flat, then I'm going to be looking for it to equal wave A and not necessarily slide below it. And I mean, this high was 23,764, and this high is 23,845. So again, there's a little bit of distance, and I would expect that to be tagged at the end here. If C is going to equal A, then I think if they still likely either going to come all the way down to that low, or actually maybe put in a slight new low below there, and then we finish and we rally. So those are the two choices that I'm coming up with today. With respect or just with the cues in mind, we did eventually, we broke. Let me just go back and let's just see what that high was. It's not what I want. Go back down to the bottom. And the cues, the high was 576.80, and that was on that spike, by the way. And so breaking 575, but I am feeling pretty strong that when we get the revised levels for tomorrow after today's trading, that in the Qs, 575 may be shifted out because it was large gamma 4. And again, I'm not really sure of the size that was sitting there or which what it calls it was a puts or combination thereof. So we had that. Continued breakdown would give us confirmation again of the market being within the C wave coming down. And what I talked about this morning, and I'm going to talk about again, if we are in that C wave coming down, I think that we will kind of start to fall apart. Like 570 should be taken out here in the Qs. And then with the next tick or the next level would be 566, which is the volatility trigger. So again, if we start breaking the volatility trigger at 566 in the Qs and the volatility trigger at 23,067, so it's 600 points below, 23,067 down here, I think then it's an easy street back down to here. So but volatility triggers, all the rest of these levels can shift. They can shift. 23,177 may produce more of a reaction similar to like breaking the volatility trigger because sitting there is the call wall. And again, we're going to get revised levels because today everything traded, and so we have to kind of wait to see where it all balances out and what the numbers are going to show. So I am not really going to go too much further than that, other than to say a lot also, and I think just because the market itself and because the media is putting a lot of pressure on this CPI number. And I would rather just say if it comes out benign, like, it could produce a relief move. Okay. Think about it such as this. You're going in, you get a biopsy taken, and now you're waiting to see, is it cancerous or is it benign? And if it's benign, you take a deep breath and you're just, you get, relaxed. There's a just release of all that tension in that. It's the same thing, I think, if the CPI is going to be benign and not really showing, then maybe even showing that inflation is kind of easing or inflation is the same. And so we can continue to try to factor in that the Fed will cut at some time in September or at the September meeting. But if not, if they continue to show upticks in inflation on a consumer level, then I think we could start to tip and start to roll lower. At least initially now. And again, I got to tell you, on that initial, if the initial move takes us below there, then it's not a 4, right? Then I got to move to 3 not move to 3, but 3 probably back over there, put the 4 here, and that's the 5. And then we're into the C wave coming down. So that would be our first sign. We come flying down with or without that number, and we start to break below this small wave 1. That's going to kind of indicate B, C, we're done. And it's a flat. Okay, so we have CPI and monthly U.S. federal budget comes out at 2 p.m. I'm not expecting that to put anything in, but we have 2 Fed people, Tom Barkin and Jeff Schmid, out speaking, and they're from Richmond, Virginia, and Kansas City at 10 a.m. They're giving a speech, and the other one is speaking somewhere. So that's how I'm going to leave this. Cautious. It wasn't an easy trade day. It wasn't an easy day. And there were individual moves that were. You can go in if you grab them. If you're a good scalper, they were there, and the ability to make some money was there. But then you were giving it back in other places. All right. Next update will be tomorrow morning.